Hello everyone, my name is Michael Robillard and this is the Evolving Trader. Today we're going to start a series called A Basic and Effective Technical Analysis Setup. Just to give you a little history about me, the first time I actually traded in the stock market was about 16 years ago. I would like to say that I took it seriously this whole time, but the truth of the matter is I took it for granted most of the time that I was trading. It wasn't until about 4 or 5 years ago that I actually started taking the stock market seriously. And now I'm at this point, as I am doing this video now, I am within a year's arm reach away from being financially independent, all thanks to the stock market. So that's a little bit about me. Before we get any further, I do want to take out some legal jargon here and pull out the disclaimers. Please note that this video and the series is for educational purposes only and is not recommended or an endorsement of any particular investment or investment strategies. Returns will vary, and all investments involve risk, including loss of principal. All investment strategies presented in this course are provided for informational purposes only and should not be considered a recommendation of any security, strategy, or specific portfolio allocation. The risk of loss from investments in securities, options, bonds, futures, and Forex can be substantial. Please consider all relevant risk factors, including your own personal financial situation, before making any investments. We're not going to be talking about options here, so we're going to skip that part. And last, no part of this presentation may be copied, recorded, or rebroadcast in any form without the prior written consent of the presenter. All right, now that we got all that out of the way, let's get into the nitty gritty here. Before we get into the technical analysis, let's talk about why the stock market. Why the stock market? Now, I'm pretty sure if you're watching this video, you have heard the statistics that over 80% of the people that trade in the stock market lose money. And that is a fact. There is no lies when it comes to that. A lot of people do fail in the stock market. However, when you do succeed in the stock market, the earning potential is unlimited. There is no ceiling. You can make as much money as you want in the stock market. The stock market is actually the perfect representation of what free enterprise is all about. All you need is the brass cojones to have money to invest in. That's all you need. The stock market doesn't care if you're a high school dropout or if you have a PhD. Stock market doesn't care if you're black or white. Stock market doesn't care if you're rich or poor. Stock market doesn't care if you are single or married. If you are willing to put in the time to invest in the knowledge that of succeeding in the stock market, you are on your way to financial freedom, no matter where you are. It doesn't matter if you are flipping burgers at Burger King right now, or if you are a CEO of a multi-billion dollar conglomerate. Anyone can get into the stock market and be financially independent. And that is the goal, to become financially independent. Now, in my adult life, I have tried many things to become financially free. I've even had my own home-based businesses selling computers. I was a government contractor at one point. I've gotten into all kinds of network marketing. You name it. Amway, Primerica, Quickstar, AmeriCredit, you name it. I have tried all of these things, and I did see some level of success, but nothing like how I'm seeing in the stock market. And there's a reason for that. Now I'm not going to knock network marketing. I'm not going to knock, opening up a business, but there's pros and cons to everything. With me, I am not that much of an extrovert to succeed in the stock market. Now, I know some people that know me personally will be like, what? Michael is a very extroverted person. But the truth of the matter is, I'm really an introvert. I just have a lot of extrovert tendencies. I don't like the pressure of sales. I don't like having to harass people. And that is the beauty of the stock market. With the stock market, once you know what you're doing, it doesn't take up much of your time. And in order for you to succeed in the stock market, you don't need to bother anyone else. I don't need 5 people to go out and get 5 other people in order for me to succeed in the stock market. All it takes is me having the knowledge and making the wise decisions. That's why I love the stock market, because it's all on you. You fail, you succeed, it's all on you. However, you don't have to fail. You can be successful. You don't have to be a part of the 80% that's constantly failing. And speaking of which, why don't we take a little bit of a look into that? Why people fail in the stock market? There is really 2 reasons why people fail in the stock market. The first reason is lack of education. Most people go into the stock market, they have an idea, they're like, oh, I can make money in the stock market, I got some money, let me invest it in something. And so they take the money and they will invest like into a big company like McDonald's or Walmart or whatever. Something that they know, okay, this company is going to be around for a bit, let me put some money in there. And then that's pretty much it. Now, those ideas in the beginning seems pretty plain and simple. If you're going to invest in a company that you know and just put your money in there and let it sit. However, once you have your money in a stock or in a commodity, there is another thing that causes people to fail, and that is your emotions. Emotions take over. And when emotions take over, you're going to make bad decisions. That happens to most of the people that are in the stock market. It happened to me in the beginning. I became very emotional, lost tons of money. But once I learned that I needed a technical analysis system, everything turned around for me. And now, like I said before, I am on my way to financial freedom. So the second reason why people fail is, well, one is the lack of education. They don't want to take the time to educate themselves on how to properly invest in the stock market. And the second reason is emotional decision making. You make decisions based on emotions. But you can eliminate these 2 factors that harm many people in the stock market. And the way you do that is with a technical analysis setup. Why technical analysis? Well, first off, when you have a good technical analysis setup, you have a peace of mind, because you are not making decisions based on emotions. You're not making decisions on a whim, having no idea what's going to happen. You're making a logical, educated decision based on what the stock market is showing you. Another reason is that not only is it peace of mind and you're making better decisions, you have better decision making, you are more educated. Technical analysis will force you to know the system, to get used to looking at charts and graphs, to be able to do fundamental analysis. Once you start into technical analysis, the education is vast. The amount of information that you need to know is huge. But once you get it, everything starts making sense. Everything starts clicking. And now the most important reason why you need a technical analysis setup is because with a technical analysis setup, you control your emotions. You're no longer making decisions based on how you feel. You're making decisions based on an educated and well-informed criteria. So that is why technical analysis is so simple. And it's a shame, it's a travesty that so many people out there want to make money. They want to make money in the stock market, but they feel like they don't have the time to sit down and study. They feel like they don't have the time to go out and buy a book and actually get into it. Most of the people I know personally that are successful in the stock market all started off by buying a book, whether it's a book on options, on Forex, on just regular stocks, on day trading. They went out and bought a book, and now they have a securities account that's 6 figures, 7 figures, and even higher. The education is the key, and technical analysis gives you that education. And once you have a good technical analysis set up, you will be able to see the stock market in ways that many people can only dream about seeing. You'll be able to look at a chart and be able to tell, okay, based on what is happening here, this is what is most likely to occur. Now, before I continue, I do want to tell you this. Technical analysis is not a hocus pocus. It's not a cure-all. All right? There is no such thing as the perfect setup where you will always win. And I should have actually put that in there. The other reason why a lot of people fail with the stock market is because they're afraid to fail. They're afraid to fail. And that's where the emotions come in. With technical analysis, you will have the peace of mind, better decision making, and control of your emotions when it comes to knowing when to go into a stock and when to come out. It is not perfect. Nobody has a perfect strategy. If somebody tells you that they have a perfect system that they'll make money every single time, run. The stock market cannot be controlled that way. Why? Because the stock market is ran by a mob, a huge mob that is mostly making decisions off of emotion. You can't control an emotional mob, folks. You simply can't. All you can do is go with the flow of the mob. That is it. As a technical analyst, I am a pure momentum trader. So as you go through this series, there are certain things that I'm not even going to cover. You know, if you've been around a bit, I'm pretty sure you've heard of things like support and resistance. Well, guess what? Support and resistance does not even factor into my technical analysis. It just doesn't. So I'm not even going to cover that in this series. Now, of course, I'm not going to tell you that my system is perfect. There are times where I'm going to lose. But what my system does is it helps me mitigate my losses. So when I do go into something that I think is going to go one way, but then it turns and goes south on me, I know to get out quickly. By the end of this series, you will see why I am being successful in the stock market. And hopefully you will be able to internalize the information I give you and help you to become a better trader. You don't have to keep doing it exactly the way I do it. In fact, I encourage you to make it your own. Make it your own. Make it something that you can wrap your mind around and say, okay, I got this. I completely encourage you to do that. But by the end of this series, you will have enough information to feel confident in going into a position and coming out of a position, because you will have the knowledge and the tools that you need to know when to go in and when to come out. And that is what the key factor is in the stock market. Now let's get down to brass tacks here. We're going to start at the very basics here. We're going to talk about candlestick charts. Candlestick charts is the most popular way that people view how a stock or a particular commodity is behaving in the stock market. As you can see here, this is a chart of Microsoft steadily going on an upward trend. And this is the actual stock. This is not a recent one. I think I went back. I don't know how far I went back, but I went back a ways on this. But these are candlesticks. These little things right here that you're looking at are called candlesticks. Now, each candlestick is actually painting a picture. It's actually giving you an idea of what most likely will occur next. Okay? The other thing I want to tell you about my technical analysis system is I don't try to predict the stock market. I don't try to predict what's going to happen. What I'm doing is I'm looking at the candlesticks, and I know based on past experiences, when you see a particular candlestick, there is a high likelihood that the next candlestick is going to behave in a particular way. Doesn't always work. Doesn't always work that way. Not always perfect. And you will see that throughout the series. But you can always have that educated decision making thanks to technical analysis. So as you can see here, this is actually from my account here. I use Thinkorswim, which is a product of TD Ameritrade that recently got bought out by Charles Schwab. The red candlesticks that you're looking at, that means that the stock went down at that time. The green candlestick means that the stocks went up, plain and simple. You can change these colors to make it however you want, customize them however you want. I keep it simple with the red going down, green going up. I'm an old-fashioned traditional type of guy, so that's the way I like to keep it. But each of these candlesticks, like I said, is painting a picture. We're going to come back to this candlestick here. Probably not in this series, but in the following series. But what we're going to do is here, for the remainder of this particular episode, we are going to actually look at the body of a candlestick. All right. So let me go ahead. Oh, black. This, and then let me get this. Okay. And let me go ahead and color this in. I'm going to color this in green. Oh. Kind of messed up, but that's okay. Actually, you know what? I'll leave it like that. All right. So this is a typical candlestick. And we're going to start off with the green one, and then I'm going to show you with the red one the difference. So this is the whole body of the candlestick, and what you're looking at here at the top and at the bottom, these are called wicks, or depending on who's giving a lesson, they'll say shadows sometimes. I think there was a third one, I don't remember what it is, but for the most part people usually call them either wicks or shadows. Now, since this is a green candlestick, what we are looking at here is giving us a picture. So what it's saying is that this corner here, this bottom corner, is where this candlestick started. Okay? It started here, and let's say that this candlestick represents 1 hour. So here's where the candlestick started in about an hour, right? At the top of the hour. During the course of the hour, it went all the way down here, and it went all the way up here, right? And then by the time the hour is over, the candlestick ended up top here. This is for a green candlestick. So basically what you're looking at here is a candlestick where money was made. The stock went up. The price of the stock went up, right? And this is what it is when it is green. So basically within the hour at some point there was a lot of pressure for it to go down here, but then most people, came in and bought, and it kept going up. It came up here, and then some people came and started selling, and it came down here. So the first question, what causes the stock to go up and down? All right? Think about this. Think about it this way. Every candlestick that you look at when you're looking at a chart represents a tug of war, a battle between people buying the stock and people selling the stock. When more people are selling the stock, when more people are buying the stock color will be green. When more people are selling the stock color will be red. All right. Now this wick tells me that a lot of people at some point got very confident about this stock. So within this hour, they tried to push the price up to here. But then the sellers came and brought it right back down. And then this here tells me that at some point, a lot of people thought it was time to sell the stock within that hour. So the stock dropped down to here. And when it got to here, a lot of buyers came in and pushed it back up. So between the sellers and the buyers, this was the primary range during that hour of the candlestick. But at some point, they tried to push it up and it didn't go. And then they tried to push it down and it did not go. All right. So this candlestick here, as you can see, painted a whole lot of pictures. Now, let us flip this to a red. Oh. All right, now let's flip this to a red. Let's say that this was a red candlestick. Now what are we looking at? We are looking at the exact reverse from the green, which means that the stock came in here, right? Started off here, right at the top of the hour, and people started selling. Buyers and sellers are both in here doing a tug of war. At some point, the sellers were so dominant that it pushed the stock down to here. But then the buyers came back and pushed it back up here. And at some point within the hour, the buyers tried to force the stock to go up, but then the sellers came and pushed it down here where the main tug of war was taking place between the buyers and the sellers. And then at the end of the hour, this candlestick would have ended over here. Meaning that the stock dropped from the top of the hour to the end of the hour. The stock became lower. All right. So that's pretty much it as far as the basics of a candlestick. Now, let's look at some other things to consider. Right? When you see a long candlestick, let me come here and erase. Yeah, let me erase it like this. All right, and let me come down here and erase this like that. Okay, looking at a long candlestick means that a lot of people believe that the stock can go up. A lot of people believe that the stock can go down. Short wicks means that there was a little bit of pressure, but not a whole lot of pressure for the stock to move one way or the other. Now, if this body was actually shorter, let me create another one here. Let's do like this, and like this. There we go. Oh, yeah, that's good enough. All right. So let's say that the candlestick was like this. This means indecision. So whatever color it is, I don't know. Sometimes I think I'm OCD. Even though the stick ain't perfect. Regardless of whether or not this candlestick is green or if it's red, if you see it like this, where there's a long wick at the top, long wick at the bottom, something like this means this is where the tug of war was taking place. Meaning that there's a lot of people that believe that this is where the price of the stock should be. So there's a lot of indecision, right? So a long stick means that a lot of people feel like this stock has, a lot of opinions on where this stock is going to be. A short body means very less of a difference of what people believe that the stock should be. And this would actually represent more of an indecision making than anything else in the market. Now, let's say that the stock did not have a wick. All right, so let's come back here, erase the top, erase the bottom. Okay, so let's say that it didn't have a wick at all. This is called a marubozo. And what this means is, even though the tug of war was going on, if it's red, that means the sellers had control the whole time during this candlestick. If it's green, then it means that the buyers had control the entire time. All right? Very important to know these things. Very important to pay attention. Now, let's come back to this short one here. Whoop, went a little bit too much. That's okay. You got the gist of it. What do you say if you see a candle like this? This is called a hammer or a hangman, depending on the color of the thing and where it's actually located. When you see a candle like this, this means that there is going to be a big change. If this is at the top of a chart, and let me see if we can go back. Let's go back here and see if we could find an example of that. Okay, right here. This looks like a hammer. Right here. This looks like a hammer right here. This one not really, but we can count it as a hammer. This looks like a hammer right here. So does this. Okay, but what do you see is happening? If it's at the top, what's happening? It's dropping. If it's at the bottom, what's happening? It's going up. What this means is there was pressure for it to go down, but the buyers pushed it up. And so now it became a buyer's market. And so buyers come in and it's pushing it up. Now, right here, see this doji up at the top means that they were trying to push it up. The sellers brought it down here and controlled it a bit. So as you can see, it kind of went over. And now we're looking back over here, and what do you see? Another hammer. What happens? What happens? Look at that. Starts shooting up. Why? Because there was pressure for it to go down, but then the buyers took control within that hour, and then it starts shooting up, shooting up, shooting up. And then this one right here is not much, but I would consider this a hammer as well. And look at what happened. Start going down. I wouldn't really consider this a hammer, but some people might argue with me. And look at what happened. Same thing up here. Look at what happened. And look at this. See, remember what I was telling you before? It's not an exact science. Not an exact science. See? But we can see the pattern enough to see that when it happens, most of the time, the stock is going up. Here's a hammer right here. The next one went up, but it went down. You see? So this is what I was trying to tell you before, that nothing is perfect. Nothing is etched in stone. And as we go through this series, I'm going to show you how conservative I am with my decision making, because I do not jump in until I see at least 3 or 4 candles that confirm the direction that the stock is going in, right? So yeah, I didn't mean to throw this off in a tangent, but I just wanted you to see how the candle can paint a picture of what's going to happen. Not perfectly, not all the time, but most of the time. And let's look here. Look at this. This can be considered a hammer, a gap up from here, a gap up from here. So as you can see, we can look at the bodies of the candlesticks and make educated decisions based on the history and the patterns of what those candles represent and how they have behaved in general from the past. All right. Now there are other candles, other candle pattern types that we can look at. We can look at what is considered to be called a doji. A doji is, there we go. A doji is line across this way, line across this way. Now this doesn't mean that a lot of people didn't buy or sell. When you see this is considered a doji. And when you see something like this, all it means is that there is great indecision. The buyers and the sellers were even. There was one point where they pushed it down, one point where they pushed it up, but at the end of the day, at the end of this particular candlestick time frame, which we're saying is an hour, it started off, let's say this is $1, and it ended as $1. This, depending on where the previous candle bar was, can tell you a whole lot of things as well. This can be a sign of a reversal, going up or down depending on where the previous candlestick was. If it was below, then this can be a sign that it's going to go back down. Can be. Not always, but it can be. All right? Let me see. Now another thing about dojis, this can also be considered, wait a minute, wrong one. There we go. Do this here. Something like this can also be considered a doji as well. If you see like this, it would still be a doji. If you see it, dojis sometimes can even form like the shape of a T. This can be considered a doji. And this right here can also be considered a doji as well. Now keep in mind, unlike this type of doji where everything is in the middle and it shows strong indecision, even though this can still be looked at as an indecision, The fact that it's up at the top here is a good indicator that there is pressure for this stock to go up. And the same thing with this. When you see this long candles, this long wick at the bottom here, even though it ended the same way it started at the top of the hour, this is still an indicator that there's a lot of pressure for this to go down. All right. So I think we're going to stop at this point here, talking about candlesticks. We're going to take this series very slow. I want to break everything down, and I want to give you guys a chance to be able to digest the information I give you. Watch the video over again. If you have questions, definitely ask them below. I will do my best to answer all the questions, as long as they're pertaining to the information in the video. Once again, my name is Michael Robillard. This is the first of, I don't know how many series we're going to have of this, maybe 8 or 10 videos. Every Sunday and every Wednesday, I'm going to be posting one of these new videos. So definitely make sure that you hit that like button and you subscribe for the next time I put one out there. And if you see any value in this, hey, let people know. Share it. Let people know. Spreading the wealth is what this is all about. You know, I don't have to do this, but I am so excited about the stock market that I have to share the wealth. I have to share the knowledge, you know, because anyone can make money in the stock market. Once again, my name is Michael Robillard. This has been part 1 of our technical analysis series. Wednesday we'll be coming out with part 2. I hope you have a great day. See you then.